Hi, I'm Brad Langille, the CEO of GoGold. We're a junior miner, explorer, developer in Mexico with an operating mine, the Parral tailings retreatment mine, where we've been operating now for 9 years of production, another 5 years of reserves left. But the real flagship is our project in Jalisco, Los Ricos, where we are developing 2 separate deposits in the same district, Los Ricos North, Los Ricos South. We have economic studies on both of them, and we currently have drilled in the last 4 years from 0 to 270 million silver equivalent ounces. And we currently have between the 2 projects 875 million of NPV.
Brad, because do you know what? We've been speaking for what, three and a half years? First time we met, isn't it?
Yep.
Is that the same?
That's right. right around the 2020.
Yeah, absolutely. So anyway, we meet in person. Right, we're at the Beaver Creek conference. Lots of meetings going on. Lots of people here. Relatively good mood outside of the conference, it seems. But who are you here to see? Let's start with that.
You know, really, we're here to see our investors. Investors, try to meet some new investors. I'll be honest with you, I don't see a lot of new faces. It's not like we have a lot of new generalists coming into the space right now. But, you know, we're seeing our investors. Our investors are very, very supportive. We're, you know, good retail, but we're also very heavily held institutionally. Yeah. I think the strength is we have a strong balance sheet and that we have a good project.
Well, I think that nailed it, one. Because what I've heard is lots of conversations, not a lot of money. Okay.
That's right. Not a lot of money. There's the window shut. And, you know, knock on wood, we're fortunate. The window was open. We knew we were going to need capital to build our project, so we took the capital. We have 99 million US in the bank account sitting there waiting for the build. We know we're going to need another 50, 75 million. We're talking to the providers of debt. And it's interesting what they're saying. They're saying they see a lot of good projects. They love Los Ricos. I think it'll be a competitive process. But they're saying, you know, we see a lot of good projects. The issue is that we know they can't get the equity portion in this market. We have the equity portion. We're fully financed on the equity portion.
Fully financed. You've done some quite some sizable and timely fundraisers, which I think maybe you get marked down for at the time, but I guess after that looked like genius.
Yeah, I mean, we don't have a crystal ball, but what we do is we always understand that we're building a business and we're trying to de-risk the business. So we know we de-risk the business if we're financing, we have a strong balance sheet. And yeah, the financings were done higher than we are now, obviously. And we have the support of our investors. And, you know, in hindsight, I think they're looking at it and say, yeah, that was a good time to take money.
For sure. Right, let's talk about what you're going to do with the money. Obviously, you've got studies out on both Los Ricos South and Los Ricos North. And I guess people are keen to understand how this thing gets built. You talk about building a company, but it's got to get into production. We're going to try and get some revenues flowing here. So I'm going to start with some promises you made at the beginning of the year about what you're going to do to allow you to be able to deliver a build out. So talk us through what you promised, and did you hit with all of them?
Yeah, I think we did. The year's not over yet. You know, it was in January. We had that kind of New Year's resolution press release, and one that we said we're going to do, you know, PEA in Los Ricos North. We were going to make sure the balance sheet was good. We got a big financing done, 65 million in March as well. We also did a PEA in Los Ricos South, and with the new Eagle claim, we completed the drilling there and we had a new resource. And some people say, well, why did you update your PEA in Los Ricos South? You already had one. We updated it because the Eagle was very, very significant. It brought in a lot of real high-grade ore, and we wanted people to understand the impact of that. So we did that PEA. What we have left to do on technical studies is a pre-feasibility study. I do think we'll get it done before the end of the year because this PEA is so close to a pre-feas. The biggest thing we have to do is the more higher level geotechnical work, and that is underway with Golder right now. I mean, they're on site, they're drilling the geotechnicals or most of the way through that study. Yeah.
No, so I'm going to come back to the money thing slightly because you raised $65 million.
Yeah.
Got 99 in the bank. Most people go, at that time I said, we've got a lot of money sitting in an account. We don't need to do it now. And I'm trying to help investors to look at management teams and go, what smart decision making looks like, because not everyone understands how to kind of build out a company. So, what were you thinking at the time to say, well, we may as well take it now while we can get it. It will top us up. You'll be well over $100 million in the bank.
Yeah.
Why was that important to you then?
Just risk reduction. Somebody told me once, look after the downside. A lot of time the upside will take care of itself. And we're looking after making sure nothing goes wrong. I'd also say I'm the third largest shareholder of the company. I view it as a long-term shareholder. And I think a lot of our institutions are long-term shareholders, and they view it the same way. So what's the best thing for the company, the business, is to make sure you execute on the business plan. You need to have capital to do that. You never want to get caught flat-footed, without that capital. So that's what we did. I view everything as an owner, as a long-term shareholder.
Right. And money obviously does funny things in the sense that it gives you optionality to carry on as normal, right? In a meaningful way, you sort of don't care what the market is actually doing, because it's beating everyone up at the moment. And to not have to worry, like the share price every morning when you wake up is quite a nice thing. But at the same time, in a market like this, I've seen it benefit companies because they've had to rethink their business plan. They've had to rethink how they come at the asset itself, how they kind of come at the allocation of capital and that return on capital investment. But for you guys, do you feel that you haven't had to change much, or were you tempted at some points to do so?
Yeah, I think it's about that reducing risk strategy. We have an asset that we can phase our way into it with capital. Right. Initial capex of $148 million, a 1,750 ton a day underground plant. With the Eagle, it's very high grade, so we can start in a very good part of the deposit, and that's why we can have an NPV after 11 years of mining of $458 million. So versus, some projects are extremely good projects, more than our almost 900 million NPV, but, they find themselves in a position where they need $1 billion of capital and they're going to have a $3 billion NPV or $4 billion, but they're trading at $200 million market cap, right? This project, this company balance sheet project that we can phase into, get production going, and then grow from cash flow and always have just reasonable amounts of debt.
Yeah.
And if I may, I'll just give you a scenario that we looking at what we're planning. We have a long-term plan, we have a short-term plan. And the short-term plan is at 1,750 ton a day mill, get Los Ricos South into production. The other thing that we're doing, we've applied for a permit. We're going through the permit process quite expeditiously. We're happy with that. And when we have it, we're going to build that, and we'll start generating great cash flow, about $80 million US a year. And then we have Los Ricos North, which is, say, 3 or 4 years behind Los Ricos South. We'll have the cash. We'll have paid down our debt. We go to the north. That's a bigger capex. That's $200 million. But with a reasonable amount of debt again, we'll get the north into production. And long term, what we're building is between a 15 million and 17 million ounce a year producer of silver. And we'll do that and generate 150 million plus a year, and have all-in sustaining costs under $10. I mean, that will be one of the premier silver assets in this space.
Very efficient.
Yep.
Now, we've all talked about, obviously, you've got sort of 2 districts in a way with North and South. And what was the kind of thinking around where you put the plants? Do they have to have separate plants?
Yep.
Obviously, you've got to do that arbitrage thing, trucking it or putting the plant equidistant. How do you work all that out?
We really went through that equation, that kind of trade-off. And in the north, it's an 8,000 ton a day plant, and the grade is lower. It's big open pit with a few satellite pits. Really? So to truck that to the south, which is about an hour and 15-minute trucking, it just didn't work. So we said, and that phased-in approach too. So it's 2 different plants. It's 1,750 in the south, and actually in year number 3 of the mine plan, it gets expanded to 4,000 tons, and then later 8.
Right. Okay.
Yeah.
So that's the discipline. So talk about timelines. Because again, coming back to
Yeah.
that thing, in a market like this, people want winners and success stories.
Yeah.
How's this thing phased through to in terms of your option A or your first option, the smaller amount? How do you get that into production over what timeline?
We have an aggressive timeline, but so far it's been ticking the boxes. It's been working for us because we have the capital, because we have the access to capital for that debt portion. We think we can get it done in that timeline. We would like to have by the end of the year that pre-feasibility study or early in the first quarter, and along with that a front-end engineering design.
Okay.
And we'll build off that. And
Okay.
the people we're talking about for the debt, they'll do that. What we need is the permit, of course, and that's what's the least in our control, obviously.
Right.
But we feel good about it because what we've asked for first is an underground permit in Mexico. And that is much easier to get right now than an open pit permit.
So a couple of things going on there. Was obviously the district that you're in. You've got all the kind of social license you told us before about some things that you're doing there. But in the backdrop, you kind of got these elections coming through, federal elections coming through. Lots of noises. I think it's affected a lot of the Mexican stocks.
It has an impact.
Certainty.
Yeah.
So elections next year.
Yeah.
So that's good news. We'll know one way or t'other. But for a long time Mexican mining guy, you've probably seen it all. What do you expect the outcome to look like? What's it going to do for your business?
What I expect is we're in a political season. There's a bit of that going on until the election next July.
And that means?
It just means maybe on the open pit side, maybe that slows down.
Yeah, okay.
There may be some in the, in process now, and I hope something gets approved. After that, we'll see where the dust settles. I will say Mexico is a country with 450 years of mining history. They have a real mining economy in Mexico. 60% of their mines are open pit mines. And I think whoever the next president is, and the current administration, I think they understand that it's a big part of the economy. I think they wanted to get their new mining law in position. There was a lot of noise around it, but it didn't end up impacting very much. It doesn't really impact us. So I think the dust will settle. I think it'll all work out. But we're in a political season, like any country coming up to election. But I don't think it's going to affect us on that open underground permit.
Okay. So your message for your current shareholders: stay as we go. We've been delivering what we said we were going to deliver, and when we said we were going to deliver it.
Right.
Expect more of the same.
That's what we're doing. One step in front of the other. Deliver on our plan. Execute. Do high quality work. Maintain that business plan. We do care obviously about the share price for sure, and but we think we'll achieve it by doing what we tell our investors we're going to do and delivering on that.
Well, yeah, I think it's like a case of you've got to deliver what you can. You're in control of what you are, and the market will come when the market's ready to come. We'll see what happens with the Fed's announcements coming up.
We need a. I don't quite know why, but there's a lot of reasons, I guess. But sentiment is the issue right now. It's not the commodity price.
Yeah.
The commodity price, if you're a producer, commodity price is good. It's just there's not that sentiment there. There's not that, for the general market, they're not jumping in and saying, I need to have junior developers right now. But things could change. And when they change, they usually change pretty quickly.
Yeah, it should do. I think it's been a tough year for retail in the sense that disposable income, discretionary spends has gone out the window. You get redemptions from, as far as the funds are concerned, so they're hoarding cash because those redemptions aren't going to stop anytime soon. So but the mood changes. Companies are set up for success, will be successful.
And I think we have our ducks in a row. When it changes, it's going to be good for GoGold.
Good, man. Well, I appreciate you coming in and sharing the story. Glad to see things are going along at a pace. One of the better silver stories out there, and a bit of gold. So we look forward to hearing more from you.
Great.
Thank you.
Thanks, Matt.